for starting your week with us. Hello and welcome to Business Daily. I'm Lee in Seoul. We have plenty on our plate today, so let's get started with a glimpse of the day's highlights. Korea's financial authorities hold an emergency meeting to closely monitor local markets amid growing uncertainties in the political arena. The Confucian tradition of children looking after their elderly parents, deeply rooted in Korean culture, could be changing, according to a recent study. These stories and more coming right up. Korea's financial authorities have announced that they're monitoring the local financial market to counter the rising challenges against the Korean economy. Our Shin Se-min starts us off.
The nominee to become Korea's next finance minister has vowed to watch the local market around the clock as the finance ministry shifts to emergency operation mode. During an emergency meeting with finance officials and local market leaders on Monday morning, Im Jong-ryong, the current chairman of the Financial Services Commission, said the measures announced are effective immediately.
Uncertainties are mounting, but the economy and the financial sector cannot take a single break, as people's livelihoods depend on it. Financial authorities will stay vigilant at all times with a strong sense of determination.
Uncertainties at home and abroad, like the ongoing abuse of power scandal involving President Park Geun-hye and her confidant Choi Soon-sil, and the outcome of the U.S. presidential election are just a few that could hurt the local economy. The Choi scandal is likely to rattle foreign investors and further curb their appetite in the local market. The U.S. presidential candidates, who have both championed protectionist values, are expected to challenge free trade down the road. Republican nominee Donald Trump said that if elected, he will oppose the Trans-Pacific Partnership and renegotiate NAFTA. Democratic rival Hillary Clinton has called for stronger regulations on imports of oversupplied products like steel and chemicals, and argued for stronger penalties on unfair trade practices. Also looming is a potential December rate hike from the U.S. Federal Reserve and the impact it'll have on the Korean economy, heavily reliant on exports and weighed down by skyrocketing household debt. Given all of these factors, Im said he will work with the Finance Ministry, the Bank of Korea, and related organizations to fend off the fallout by implementing an emergency contingency plan if necessary to ensure market stabilization. Shin Se-min, Business Daily.
Then what is the state of the Korean economy? A think tank which had previously affirmed the government's optimistic view looks to be stepping away to pessimism in its latest report released today. Our Eunice Kim shows us the data.
Ordinary Koreans have expressed that making ends meet has become harder now than it was just before the 1997 Asian financial crisis. And a fresh analysis by Korea Development Institute looks to support that view. In its report, KDI noted, against a backdrop of continuously sluggish exports, domestic consumption has slowed as well, weakening Korea's economic recovery. It is just the second time KDI has used the term economic slowdown in its report, the last time being in March. And a comparison of indicators paints a sinking economy, especially weighed down by household debt and unemployment. Household debt, often described as a ticking time bomb, saw its ratio against GDP climb to 90%. Some warn it could reach 100% against GDP next year. Meanwhile, household income growth fell significantly to under 1%. Manufacturers' average rate of operation is just barely holding on to the minimum in the 70% range, while youth unemployment has more than doubled from figures prior to the 1997 Asian financial crisis. The growth in private consumption, meanwhile, has shrunk by 1/7 of what it used to be, while 3 in 10 Korean companies in the first half were found to be zombie firms, struggling to keep up with even their interest payments, much less investment. Coupled with the globe's growing protectionist sentiment, the export outlook for next year is not bright, deepening concerns for what's ahead for the Korean economy. Eunice Kim, Business Daily.
A study by the Bank of Korea has shown that the country's soaring household debt has a stronger tie to home prices than it does to the state of the economy. This is contrary to the credit cycle of companies, which had a firm correlation to the economy. As of late last year, mortgages made up more than 71% of household debt. Meanwhile, the growth in home prices stopped at 1.37% through July of this year, according to Korea Appraisal Board. The gains were significantly lower than leader Canada. Home prices were expanded by 9.7%, and even Japan at an average 2.03%. Job growth here in Korea has dropped to its lowest level in 6 years amid the government-led corporate restructuring drive. According to a report by the Labor Ministry on Monday, the number of workers eligible for employment insurance rose 2.4% to 1,265 in October. Now, although the number represents an increase in hiring from the same month last year, it is still the lowest since September of 2010. This is mainly due to job losses in the transportation equipment manufacturing sector, which has been hit hard by restructuring in the ailing shipping and shipbuilding industries. Hiring in the sector fell by more than 10% in September from the end of last year. After dropping sharply last week, the Korean equity market managed to rebound on the first session of the week. Now, political risks from both home and abroad appear to be the main dominant factors in investor sentiment. And we're now joined by our markets contributor, Choi Jin-seok, to talk about today's market action and upcoming market events. Hello, Jin-seok.
Thanks for having me.
All right, so a little bit of relief today, right? And how did the Korean stock market close on the first day of this week?
Right. The Kospi market rose by 0.79% to close at 1997.58, while the Kosdaq surged by almost 2% to close at 622.17. The Kospi index once recovered 2,000, largely helped by institutional investors who bought shares for 6 consecutive sessions. Although the Choi Soon-sil scandal is still ongoing, the domestic equity market managed to rebound from last week's sharp decline. The announcement by the FBI on Sunday that the agency's review into emails of Democratic presidential nominee Hillary Clinton hasn't led to any new findings helped ease external political uncertainty. Most blue chip stocks, excluding KEPCO, Amore Pacific, and SK Telecom, enjoy intraday gains, and by individual stock, SK Hynix became the second largest stock by market cap, beating Hyundai Motor Group.
Now, uncertainty surrounding the U.S. presidential election has been a negative catalyst in global financial markets, and that's probably why the U.S. stock market dropped sharply last week, right?
Exactly. After the FBI restarted a probe into Hillary Clinton's emails, the gap between Democratic nominee Clinton and Republican nominee Donald Trump has been narrowing significantly. As a result, uncertainty in the global financial market has been on the rise. 3 main indexes of the U.S. equity market plummeted last week. In particular, the S&P 500 index, which fell by 1.9% on a weekly basis, had fallen for 9 consecutive sessions, marking the longest losing streak since December 1980. Over the 9 past sessions, the index had dropped more than 3%. Robust job gains in October didn't help lift sentiment in the U.S. market. Although Asian stock markets usually follow the trends of the U.S. market, since the FBI announcement came out on Sunday, Asian markets reacted to this positive catalyst in advance. That's why we can expect today's rebound in the Korean market and in Asian markets overall is likely to give boost to the U.S. market opening this evening.
So the U.S. election is undoubtedly going to be the most important market event for this week. But how are the markets expected to react to different results?
Right. While domestic political risks remain, the U.S. presidential election will be the most important event this week. Polls will open on Tuesday, and the results are expected to be out Wednesday, Korea time. Global financial markets do not want Republican nominee Donald Trump to be elected, with his victory expected to impose severe threats to asset markets. British firm Barclays expects the S&P 500 index will further decline by 11 to 13% if Trump gets elected. And emerging markets do not want him to be elected or the next U.S. president either. A survey by Hong Kong South China Morning Post shows 76% of respondents from 6 Asian countries support Clinton. Citigroup expects the MSCI Emerging Market Index to plummet by more than 10% if Trump gets elected.
So depending on who wins this U.S. presidential election, it's expected to have different ramifications for each sector or different sectors. So can you elaborate on that?
Right. It seems obvious if Clinton wins, global asset markets will enjoy the so-called relief rally, while Trump's victory will heighten volatility throughout the markets. But different types of reactions are expected by sector. On one hand, global banking and healthcare sectors are expected to take the biggest hit if Clinton gets elected, because she has been claiming stricter regulations on financial institutions and drug price discounts. On the other hand, companies related to renewable energy can benefit from her victory. If Trump wins, share prices of the conventional energy sector and defense companies are expected to rise. In terms of the foreign exchange market, the US dollar will drop while the value of emerging currencies will rise if Trump wins.
So other than this U.S. presidential elections, what other events should investors take a closer look at this week?
First of all, we can't overlook the importance of China's trade data, and the country's October exports are expected to decline by 5%, but that would still be better than the 10% decrease in September. We also have key Fed officials delivering speeches this week. Chicago Fed President Charles Evans on Monday, St. Louis Fed President James Bullard on Thursday, and Fed Vice Chair Stanley Fischer on Friday, local time, will give their opinions on the Fed's future policy path. Lastly, the Bank of Korea, or the BOK, will hold its policy committee on Friday, and most experts are leaning towards an interest rate freeze at this month's meeting.
All right, thank you so much for all that today.
Thank you.
The local auto industry is likely to see no-hit models this year. None on the markets are projected to reach the 100,000 sales mark, attesting to their popularity. Industry officials say Hyundai Motor's mid-sized sedan Avante sold the most at around 78,000 units as of October, followed by Porter, a small truck also from Hyundai. The firm's Sonata, which had topped sales for 2 consecutive years, came in at third. While Avante and Porter are expected to compete for the leading slot, industry watchers say neither are likely to reach the prestigious mark, mostly due to the union strike at Hyundai, which cost the carmaker 142,000 vehicles in lost production. The protracted economic slump and the slow change in car lineups were also cited as reasons. Since 2000, there are only 3 years in which no models clinched the 100,000 mark in sales. Korean retailers are gearing up for a surge in independent travelers from China, with nearly 60% of Chinese nationals that visited last year traveling individually instead of in large tour groups. According to Korea's biggest duty-free stores, Lotte and Shilla, about 50% of their customers as of September were independent Chinese shoppers in their 20s and 30s, prompting operators to roll out customized marketing. Lotte has been offering personal shopping assistance services for VIP customers, while Shilla has been holding regular beauty classes on Korean cosmetics for deep-pocketed visitors. The shift comes at a time when Beijing is tightening regulations on low-quality, cheap package tours offered to their citizens by other countries. Korean society has changed over the years when it comes to family structures and responsibilities. And a recent survey highlights a potential change in perception, especially when it comes to care for the elderly. Our Lee Ju-young has more.
The idea that children should look after their elderly parents has been a culture deeply rooted in Korea, stemming largely from Confucian traditions. But according to a recent study, that social perception may be changing. According to a joint survey analyzing a total of 37 countries on the idea of elderly support, over 90% of Filipinos said immediate families should be the main caretakers, followed by Argentina and China. Korea ranked as low as 31st, close to other Scandinavian countries like Denmark and Sweden, who believe the government should take an active role. On the question of who should bear the financial burden, less than 30% of Koreans said it was the family's responsibility, substantially lower than countries like Canada, the US, and the UK. Experts say while there have been attempts to explain this change in perception through the lens of increasing individualism, other elements should be factored in. They say unfavorable economic conditions such as unstable employment and surging household debt have made it harder for families to fully assume responsibility. They add this should not be regarded simply as a fundamental shift in values and that a more generous atmosphere should be created for families so that people are not stuck with a difficult choice between family and money. Lee Ju-young, Business Daily.
And that wraps it up for today. Thanks for watching, and we'll be back tomorrow with more at the same time, same place for your Business Daily. Until then, goodbye.